Good morning and welcome to the Killik & Co market update. We're in the middle of quarterly reporting season and we've got lots of company results coming out, and we have seen some quite big moves in some individual names. The US election is still a key focus for investors, and over the last couple of weeks we have seen some movements in the markets that suggest some investors think Trump is now more likely to win. Trump favors less regulation for the financial sector, and therefore American banks could be expected to benefit from a Trump presidency. Here are the share price returns for JP Morgan and Goldman Sachs. Both have had a great year. They've made more money from loans because interest rates have been relatively high. There has been a lot of trading activity in bond markets, which has been good for their trading desks. And the prospect of interest rates coming down a bit, but still remaining above COVID levels, is leading to an expectation of more mergers and acquisitions taking place, and that would be good for the investment banking parts of those banks. While it has been a good year, you can see a notable pickup in both share prices during the last few weeks. US macroeconomic data has been good during this time, so that could be a reason, but many are putting it down to the so-called Trump trade. We're also seeing a pickup in the shares of US big oil companies. Here are the returns for Chevron and Exxon. Trump favors fossil fuels over clean energy, so this could be another Trump trade. And finally, the dollar has strengthened of late. Here it is against the pound. It was on a downward trend for most of the year, but it has recently moved the other way. Some are arguing that this is also evidence of the Trump trade. Trump is keen on more tariffs. Tariffs tend to raise prices for everyone, and therefore they're inflationary. If inflation goes up, then interest rates would have to remain high, and that would encourage people to hold dollars, and therefore the dollar would strengthen. There is still about a week and a half to go until the US election, and a lot could change in that time, so we'll be keeping a very close eye on the movements in the markets. One of the companies reporting this week was Intuitive Surgical, which is the world leader in robot-assisted surgery. Intuitive's flagship product, the Da Vinci surgical system, is becoming increasingly popular with surgeons. Intuitive expects the number of Da Vinci procedures this year to be 16 to 17% higher than last year. The market was very happy with those results, and the shares moved up to a new record high. Here's the 5-year chart. Intuitive is an American business that operates globally, and the NHS has been using its products. Here's the number of people on the NHS waiting list going back to 2007. As you can see, the number waiting was around 4 million before COVID, and it's now over 7 million. Robot-assisted surgery has been shown to increase efficiency, so more of this could be a way to get those waiting numbers down. And finally, Boeing's workers have voted to remain on strike. 33,000 Boeing workers have been on strike since mid-September. Boeing has around 170,000 employees globally, so that means that about 20% of them are currently striking. The striking workers are calling for more pay and a reinstatement of their defined benefit pension. The aircraft industry is essentially a duopoly, with Boeing and Airbus the two major players. Here's a comparison of their share prices since 2009. Boeing moved ahead from 2016 as management cut costs and boosted profits, but the share price dropped due to the fatal 737 MAX crashes, and then both share prices dropped significantly during COVID. Airbus has recovered to pre-pandemic levels, but Boeing is nowhere near. Please do give us a call if you'd like to talk about these companies in a bit more detail. Moving on to have a look at next week, it's a big week for big tech, and we are expecting results out from Microsoft, Meta, Alphabet, and Amazon. That's it from us. Have a great weekend, and we'll see you next Friday.